In this week's video, I want to take a look at why I believe fear and panic has just set in the housing market and why this is going to lead to much bigger falls in the second half of 2023 and beyond. So I was on Twitter over the weekend and I came across this image, and this shows in a visual format the types of mortgages that people are choosing to take out. And I think it shows, it's very strong evidence that the mindset in general of people involved in the housing market has shifted strongly from the end of last year to where we are now in July 2023. So let me talk you through the data as I see it. Now, of course, this is all open to interpretation. And if you've got a particular bias, you can always make the data suit your bias. But I genuinely believe that this reflects the turning point, that the fear and the panic that is starting to hit the market. And this is only just the beginning. So if we go back to September, it was the end of September last year when we had the infamous mini budget. And then throughout October and November, we saw the cost of borrowing soar and mortgage rates went up very, very sharply. And you can see this reflected in the data. So in November, which is probably the peak of the fear in terms of, or not peak of the fear, but peak of mortgage rates at that time, over 63% of people decided to go onto a tracker mortgage, which suggests the mindset that they all felt, not all of them, because obviously the rest went for fixed rate, but over 60% of people at that time that remortgaged felt that this was going to be temporary. It was just a temporary blip in the markets and things were going to be absolutely fine. And sure enough, the next few months, things did start to improve. And if we look at mortgage rates, we can see after the peak, just in October, November time, things did start to come down. And I remember the first quarter of this year, there were lots of talks that mortgage rates were going to start to drop back below 5% and below 4%. It didn't happen. And then we had the inflation data a month or two back, which confirmed that inflation wasn't coming down, and everyone realised that this was not temporary and the Bank of England were going to have to continue hiking rates and interest rates were going to go up. And the markets have reacted strongly. You might even say the markets have overreacted a little bit in the past few weeks. So we may see these come down a fraction and settle down a bit lower than their current rates. But what we saw at this time is when this happened, people were so confident that this was only a temporary blip, there was no fear or panic, that they all went onto trackers thinking, we'll just take a new mortgage when rates settle back down. But obviously things have played out as we just discussed. They came down, then the realization that inflation was out of control and it was still a problem, and that the Bank of England were going to keep rates higher for longer, and rates are expected to continue to rise for the rest of this year at least, and it will probably be a while before they start to come down even a small amount. And when they've realized this has impacted their behavior. So I'm just going to hide the webcam so you guys can fully see this diagram. So if we come back down to June, so this was last month, in a very similar situation with the rates. So if we go to June here, at the end of June, rates were soaring back up, and in July they're reaching their peaks again. But this time around, instead of people taking trackers, believing that rates are going to come down and inflation's going to be absolutely fine and the Bank of England are going to stop hiking rates, people are scared. People are thinking this could get worse. Otherwise, if they didn't think things were going to get worse, why would they take a fixed rate at the highest the rates have been this year? And at the moment, they're higher than they were at the peak last year. So what this says to me is at this moment in time, the people that are taking 2-year, 3-year and 5-year fixes, and you can see the orange bar, let me just hide myself again there, the orange bar in June is almost non-existent. So you could probably say over 95% of people are taking fixed rate at the moment in a very similar setting to what was happening here. But the difference is here, people were either positive and believed it was only temporary, or they were in disbelief and in denial that things were going to get bad. Whereas here, people are now scared. People are feeling the panic, they're feeling the fear, and they're trying to protect themselves. So personally, taking a tracker now is probably a better decision than it was here. But this is how the markets work. People, as my brother said to me this morning, a lot of people generally make the wrong decisions at the wrong time. And that is what is happening at the moment. People are making decisions based on peak fear and peak panic. And if anyone's ever been involved in any type of market or trading over the past few years, and especially if you're in the crypto space, people always talked about buying at peak fear, because that's normally the best opportunities, and selling at peak euphoria. So that's almost what we're seeing here. People are fixing at peak fear, when really, although interest rates may go up a bit further, if you would hedge your bets, they're probably closer to their peak now than they were back here. So it's more likely than not they are fixing at the wrong time. But I think this reflects the fact that the sentiment in the market has changed from sentiment here back in November thinking this is just temporary and everything's going to be fine to, oh my word, things are going to get worse than they currently are. If they didn't think they were going to get worse, they wouldn't fix. They'd go to the tracker. So that shows how their mindset has shifted when over 95% of people are taking fixed rates at the highest rates we've seen in the past 15 years. And this is also reflected in the number of mortgage approvals. So you can see the average line here from 2013 to 2019, pretty average, about 70,000. And then it dropped off for the lockdown period, then a spike afterwards. And then now we are well below that. So year on year, mortgage approvals are down 26% for remortgaging and just under 24% for house purchases. And if they were already down at this level in May, before we saw the most recent peaks, do you think more people, well, technically mortgage approvals could go up next month as more people panic and start fixing. So we may actually see a peak. But I certainly think this sensation of fear and panic is hitting the market and buyers are going to start to react accordingly, and sellers, of course, are going to react accordingly. I think buyers have been in this mindset for a while now. They're just waiting for the sellers to wake up and bring the house prices down. And we're seeing some very, before I get into this too much, I don't like talking about the Rightmove index really on this channel anymore, as I think it's such a poor index. It only covers new listings. It doesn't cover all of the existing listings that are on Rightmove that have been reduced. And it's honestly frustrating when they have this data available, yet they decide to only publish the new listings. So, but that's just putting that aside for one moment. We can see they've reported a monthly change of minus 0.2%, but overall annually we are almost flat now. So there's every chance in the next month or two, Rightmove asking prices, remember for new listings, for new sellers only, is going to go negative year on year. And in that case, you'll have Halifax, Nationwide, Rightmove all negative year on year, and the ONS are only just behind because they lag so much. But in reality, house prices are down year on year at the moment. So the sentiment has changed. Sellers are very, very slowly waking up to the reality. You've only got to go onto Rightmove yourself. Now, this is going to vary from area to area, and some places, of course, are going to still continue to sell well. But the majority of areas, you go into that, the number of reductions has gone through the roof. So sentiment has changed an awful lot since we saw the September mini budget, followed by the fallout of that, where people felt it was temporary, to now people are genuinely scared. People are fixing their mortgages as they feel things are going to get worse. And they may get a little bit worse. They may get a lot worse. I don't think they may get a lot worse. They may get a little bit worse, but I actually think now is probably a bad time to fix. And I would certainly be going to a tracker myself and seeing how things played out over the next few months before committing either way. But that was just what I would do. Don't take that as financial advice, please. So that is how I see the market at the moment. Now, if you're thinking about buying a house at the moment or even selling a house, I'm going to pop up a video now which talks you through a number of Rightmove red flags that you guys need to be aware of. And I'll see you guys over there.